Some wild moves today and after hours. Let's jump right into it and let's just get into the nitty gritty here. We'll start on a much smaller scale. We're going to go a little wider on the NASDAQ, but let's just look at what's been transpiring. We can see that 830 bar that happened right here. And why is that important? That is when PPI was released. I'm not going to waste a lot of time on it because we get right to it. PPI was in line to up a little bit than expected. We don't need to spend a lot of time there. What's important is this level. And the reason that this level is so important is because they're making it important. If we take a look, that is that 830 level from the CPI. And why is that important? It's the same 1 minute bar that we hit, that we rejected on. We went over this when we did the pre-market live this morning. Same exact level. This is where they're playing at. Look where the battleground was. And this is why those levels are so important. Once you know to look for them, your life gets a lot easier. You can see the battle here, even off the open, cracked, retested the level, over, rejection, over, boom, and then that was it. And we sold down at the end of the day really into Powell's speech, which was a non-event, but it looks to me like they just wanted out of the market, that they had enough. And we're starting to crack a little bit here. So I'm going to take all this off. We're going to drill into this on a 15-minute and then off a 5. And we're just going to go back all the way to the 5th. And now the 5th is obviously when the election, when we have to see how this is going. And what we're starting to do is we're starting to see that slope. And I think reality is setting in a little bit here, that not every appointee and not every sector is going to benefit from what's about to transpire. And we're going to get to that. Certain sectors are going to do better than others, but you are starting to see a pretty standard break here. And if you blow this up and just look at it, you're starting to see that left shoulder, head, right shoulder area. And once you start to get that, it's definitely something that, again, should be on your radar. So take a look at it. And from my perspective, I think it's pretty obvious. But you always want to pay attention to this stuff because it's going to lead the broader market. Remember, the way that I trade is pretty simple. I trade where I focus very heavily on the index, and then from there, I focus on the sector. And then I focus on the stock. So the way that I tend to go is I'm very theme-based. I'm what you would refer to as top-down, where some people would just be bottom-up, where they're just looking at the stock, and then they're looking at the sector, right? And then they're going to look at the index. I'm the exact opposite of that. I am what you refer to as top-down, where I am looking at the stock basically third. So I do not think that the tail wags the dog. It's very hard for the indexes to go lower and your specific name go up. So when I see that kind of stuff, I just want to pay attention to it. You can see the head right here pretty clearly. And then you're going to come over here, and then you're going to see the right as well. Now, why this is important is because now you know what broke. And then you would take the measured move of that break and go from there. Now, the reason, again, is you just measure from the top of the head to the neckline. And once you do that, you'll get an idea on where that could possibly go. So it gives you 1%. Really not the end of the world. And you always do it in percentages. You never do it in numbers because the numbers change as you go down, obviously. And you look at 1% and go, okay, where's that put you? 59.25 right in here. 5,900 is really where we thought about getting to anyway. We said that was kind of that level. So you're looking at a band of where you're going to find support. Maybe somewhere in here, maybe. And we don't even know that you're going to get there. There are signs that I don't even know that you're going to get here right away. Honestly, I do think you need to gap fill. I do think you need to fill in some of this, but I don't even know if you're going to get to that band anytime soon. You don't really have anything here. What you want to watch tomorrow after retail sales on Friday is just a retest of that level and then how we respond to it. What we've noticed is some of these retests are holding. Others are not. Let's take this off for a second, and then let's just get into this on a daily and stare at it. And you'll note the same thing. Here we are on the break on the 7th, and you're still holding the 7th, and you still have the move from the 5th and the 6th. Not all indexes have that, guys, and that's definitely something that we need to focus on. Who still has that, who doesn't have that, and why that's so important. Because it tells you, quite frankly, where the money's going. And I think that's a really important aspect of looking at this. For example, if you look at the trading hours when IWM is open, you've lost your entire gain. So they're definitely selling small caps here, and that's pretty clear. Now, they're probably selling small caps based upon the fact that they're not going to cut rates as much and that they're starting to see signs of inflation holding. Not really rising as much, but holding. So therefore, there's really no reason to do anything. So there probably will be less rate cuts. Maybe there's some pressure from the administration to do more. Who knows how that plays out. But this is very clear that not all indexes are made the same. Take a look at the Qs, for example, and you start realizing, okay, we only gave back to that Thursday, but here's Wednesday and then obviously Tuesday. So did you give it all back? No. But you're starting to do a couple things here that are worth mentioning. So let's get this back to just get rid of the pre and the post. And this is what I would focus on. In front of you is a 3, a 5, and an 8-day moving average. Now, why this is important is that you haven't broken it yet. This was the first time. So this is the first day that you're actually closing below the 5, and you have a 3-5 cross up here, and you're trying to hold the 8, and you're sitting right on that 508.67. So if you start breaking down here, then you're starting to look at 506.5. You're starting to look at roughly 500, and then you start getting into these gap fills. 492. Can they fill? Yeah, they can. Do they fill tomorrow? Yeah, your guess is as good as mine. I'm not sure that they do, but nobody really knows. So what we do is we look for levels of interest, and then we just see how we act. So obviously the first one would be that 506 level. Now if you take a look here and look from the SPY perspective, same exact thing happened. You have a 3-5 cross and you're sitting on the 8. The 3 is green, yellow, red. It's on a 15-minute chart, but these are daily moving averages, and it just shows you how they're playing out. Just a different perspective. And once you start to see that, you're starting to lose the short-term side of the market. You need to hold here, and then you'll just start filling in the gaps. And there's nothing but air down here, quite frankly. So we really need to be careful here, very cognizant of what's going on, because 585 could happen pretty quickly. Now, you're seeing some give in some of these sectors, and we should talk about this. For example, XLV completely imploded today, and we're going to talk about why. And I think it's important to understand this. It's not everybody that gets appointed is going to be good for the market, not good for that particular sector. And that's what we're seeing here with the healthcare sector. Trump picks RFK anti-vax activist for Health and Human Services Secretary. During his presidential campaign, Kennedy developed a national profile for his criticism of COVID, vaccines, and childhood immunizations. Let's get into it. So Trump came out swinging, thrilled to announce Kennedy, U.S. Secretary of Health and Human Services. For too long, Americans have been crushed by the industrial food complex and drug companies who have engaged in deception, misinformation, and disinformation. So when you see wording like this, it is very clear what their stance is. This is not, hey, he's going to do a great job. This is, hey, this is broken and this guy's going to fix it, which means the companies that were making money, they're the ones that will be hit the hardest by this. And just so we're clear, the appointment of Kennedy 70 leads HHS days of speculation about what health role independent presidential candidate Trump advisor would play in the incoming administration. HHS oversees CDC, FDA, NIH, Centers for Medicare and Medicaid. So he's pretty much at the head of the Hydra, and it's going to be pretty fascinating to watch. And it's not being received very well. Former acting director of the CDC, Richard Besser, was stunned by the announcement. I'm speechless to have someone leading the Department of HHS who has been one of the biggest purveyors of misinformation about vaccines, biggest purveyors about public health, would imperil the health of people across the country. So this is going to be quite the battle. Now, why should you care? You should care because vaccine companies, they're going to have a real issue here. And the issue is going to be some of the speculation that's out there that they're going to try and pierce liability on the COVID vaccines. This has been floating out there for some time. There was actually even a comment on it today, which of all things was pretty interesting. But right on the announcement, if you take a look here off the open, here's BNTX. And you can see how it was doing. Candidly, I had a long on that, but no longer. But you can see how it was just acting just fine today. And then out of nowhere, that news hits, his roll comes out, and that's the end of it, down $9. And then watch mRNA as well. These names are going to get hit pretty hard tomorrow. So you might want to watch it, NVAX as well. And then, of course, Pfizer, that's tied to it all, is down after hours. Why is this happening, and why is it something that you need to be aware of? I would think that the investment banks are going to look at this and say, we don't know what he's going to do, but it definitely is not going to be good. So if you look at things from three different perspectives when somebody's appointed to one of these, and let's just say that he clears everything and he gets through. If you're appointed, and you go through all the hoops and the bells and the whistles to get appointed, you're either going to be one of three things, right? It doesn't really get that hard. One of three things. You're either going to be a net negative, you're going to be neutral, or you're going to be a net positive. You're only going to be one of three things. It's very clear that he is neither of these two. It is very clear that he is a net negative for pharma. So what you're starting to see is the pharma names are starting to come in. They hit XBI on this a little bit, right? And then they certainly hit IBB, which is more heavily weighted. And so you're going to see names like Amgen. All of them are just going to get hammered because the level of scrutiny that's going to go up because of him is going to be something that people are not going to be used to. Whether you think that is good or you think that is bad, doesn't matter. What matters is this is what's going to happen. So what this means is You have these mergers and acquisitions, but does it take longer for drugs to get approved? Is there another level of scrutiny? How much liability do these companies now have? If you're a hedge fund and you're an institution and you own mRNA, are you going to stick around tomorrow to see how much liability you have? Or are you just going to get out of the trade and say, let's see what happens? And that's exactly what you saw happen here with Pfizer. Take a look at this and how fast this dropped. As soon as that news hit, you could see that it was leaking, but as soon as that news hit, that was it, and an utter just collapse. And I think you might see some comments. Look for comments out of investment banks on this tomorrow, but this is definitely something that is going to play on the minds of most investors tomorrow. Other sectors are holding up quite well, with XLE pushing very nicely, with the slogan "Drill Baby Drill" seems to be catching on. So you're seeing some motoring here. Does it continue? It looks like it's going to, doesn't it? I mean, you never know what's going to happen. But if you take a look at this, I mean, it's a pretty nice move. You know, up, down 3, get a little reversal pattern, flips, and now you have him drill, baby, drill. And so it doesn't really get more obvious that you have net buyers here. You haven't been this high since May. So this is definitely, to me, a net positive. One of the biggest surprises so far were the pot names. And I find this fascinating because somehow the Republicans became the party of pot. And I don't know how that happened. But here we are. The Attorney General that's up and running, right? How is that going to affect everything? Well, he seems to be in favor of the legalization, certainly in the decriminalization of it. So that seems to be getting some attention and moving. As soon as Kamala lost, you saw this. But they had control of everything for years and did nothing about it. So does something come from that? Maybe, maybe not, but they're leaning this. The one thing that I would say out of everything that is certain is energy is definitely a net positive, and healthcare's got some issues here. They're going to go after healthcare pretty hard here, and I think it's going to be an issue. And I think we're starting to see that really with the pharma names, and you're certainly seeing it in biotech today. So I would expect that to continue for days to come. I don't think that's going to be a one and done kind of situation. Now, tomorrow you have option expiration, and one of the things that I would pay attention to, this is max pain right here. And what I'd be paying attention to is the 148 level. You've not been able to clear that. You just want to look at the open interest. Anybody can go here. This is free, so I like using free websites for you guys. 150, 155, you're sure not getting there. They're certainly expiring. But then we go into next week, and the question is, what really happens next week? Well, I personally think you get to the point next week where you start to see some buying and options ahead of NVIDIA. And I just want you to be aware of this, that this is what you're seeing out there right now. So you have some big walls tomorrow. And I don't think that you're getting through that 150 tomorrow personally. And 148 doesn't look like they want to pay out either. If you take a look at what they did today, it was all near the 150. And then you start looking at the vol that they traded today. It was really at that 147 level. So when they go out there on the vol side tomorrow, they really don't want to pay off 147 either. So do you get wedged in between 150 to 146, 147? I think the 147 to 150 wedge looks the best. Take a look at Tesla. Now, if we take a look at Tesla and what they're doing right here, the 340 level, you can see right there, that just was just like the wall that you shall not pass. And you had a couple others here, but nowhere near that level. So you really have that 325, 320, that 310. They certainly don't want to pay on that tomorrow, and they certainly don't want to pay on 300. So when you see this, where do you think you're wedged in? Somewhere between 320, 325 seems to be optimal for them. They certainly don't want to break that 310. So I think that's definitely an area of interest. If we look at where did they play today, a lot of buying around the 300s, and then a lot of buying around the 330s today. But where were you net? That 320 level. So if you look at that, you realize that that's where they're going to be playing tomorrow, but that's telling you the volume that they played, right? So that's where the most volume will be tomorrow, but what did they hold overnight? They held the 340s probably because they didn't have a choice because they're now wallpaper, and they're holding the 325s more than the 320s, but really those 310 puts is really where I think that if I was the market maker, I'd want those to try to get expired. And when you take a look at this, they say max pain's 288, but it's just not going to happen. You can see the skew. They just don't want to pay out on any of this. So, you keep it as light as possible if they can. You never know with this name, but I think that's important. Kind of interesting how this name moved today. And we could see this drop after hours, 308.29, and we're talking about that 310 level, and you just lied right there. There's a pretty decent short today. It was actually fairly easy to spot. The fact that we sold down on EV credits possibly going away when even Elon said EV credits are going to go away is kind of fascinating. I'm not really sure why. What I do like about this market, and if I could give you one piece of advice on how it's going right now, once you see the themes are kind of staying that way. In other words, once you have a change in trend, the trend seems to be staying. what we're seeing is optimal is just waiting for the reversion. So in other words, instead of shorting into it, you're always getting these retests. And once you see them, they seem to be the best place to put these on, and then just kind of go from there. And you're seeing it everywhere, but you're definitely seeing a change in trend. I was surprised this was that weak on something so simple that we knew, and that becomes a problem, and that leads to, okay, are we overextended? Do we see that retest of 270? I don't know, but that's not a great pattern. I'll tell you that. That's a break where you think you're going to gap down, and we're seeing a lot of that stuff. We're seeing the same follow through. I actually was surprised how well Bitcoin is holding. And I'm going to clean, well, let's do it this way first because this is important, I think. And let's get rid of all my nonsense and just focus on price. So you watch these levels and you're watching how it's holding on the day. And I watched this because I came in short and then batted around a little bit, did okay with it. Candidly would have done a little bit better just leaving the darn thing on, but you never know. So you start to seeing a lot of buying. You're trying to hold this 88 level. It doesn't really seem like that's going to hold, does it? We keep rejecting up here, and then we failed again at around 5 o'clock. So I think that 85 level does get on the table finally, and you can see that break, rallies. Right now you have this huge H. So you would measure from the H to here. You can see that that's probably going to be around 2,000. So you would say that's roughly what, about 2.5%, 3%. And it's really going to put you right at 85 by the time we're done and having it marked off. And I do feel that there's some kind of test coming back down to that level. And I don't really think that's the end of the world at all, quite frankly. But I think that that's where you're heading. And you can see this with the same names over and over again. We saw this today with coin, and it just presented another opportunity again, like right off the open to short it. And this is exactly what I mean. Once you have these trades set up and you have your key levels, and once you see that you can't even get over them, they're just becoming very easy shorts. Now, if you don't short, then you don't short. But when you start to see this kind of stuff, you watch these like pops over these core levels, the rejections, it's getting pretty easy to see where to short these. And again, we shorted this and did quite well. And then it just, you're trimming on the way out, and then you're just watching how it's going to act at a certain level and going from there. Here, watch this trade live. This is one we did today. Should have just stayed short. Yep. Short stock. I used the high of that bar. They just played with me. And they might rip it again here. $1 on coin already. Up 2 on coin, pulled something out. That was fast. It made it pretty clear which way they're leaning. Coin up 3, trimmed. I got to still watch the coin and see, are we going to bounce? Are we not going to bounce? I got pulled off enough that I can watch it and see how this plays out. Because I can just run right back up. Come on, you're next. Come on. There we go. Boom. Trimmed. Up 5. Coin looks way worse. Coin MSTR, the stops are break even, guys. I'm up $10 on the coin. I'm not doing anything with the short. You're breaking that level. There, I'm taking out the lower low. After this forms in 2 minutes, I really want to watch the high of that, because unless I get over that, there's nothing for me to do. If you can stay in, because if I can stay in them, I want to stay in them all day. I want to stay short all day because I think this can get super ugly. Let's say that Bitcoin goes to 85. These things will get smoked, but I have to have some kind of stop level. 100% out of the coin short, and I might regret that, but we'll see. MSTR was very similar in its nature, the rallies, the retests, and going from there. And what we are seeing, and I want to be really clear about this, is you're seeing follow through. If I clean off my 100 levels, drop this down, and just look at price, once you break, and that's it. And they're abandoning them. Well, in other words, you're not seeing those retests catch as much. I'll give you a couple examples of this. Take a look at RDDY, for example, or RDDT at Reddit. And once you saw that break, you can kind of see that you're trying to slowly build up there, right? But then once it's broken, they're falling apart. Tries to rally, completely falls apart, and then you have the lower lows. So people say, well, it shouldn't be there. Well, nothing should be anywhere that no one wants to pay for it, right? So it really doesn't work that way. You have to think about it and go, okay, well, you're not having follow through. And then Kava, we can all make fun of it and say, well, it should never have been here in the first place. Well, you could argue that even here, it was never worth what we paid for it. So I agree with that as well, but once you broke the other day and you were at 160 and then you're breaking down again, you can see how this is playing out. Take a look at this today. This was textbook. We just shorted it again, and it was very simple short. All we did was just let it run right back up to the high. Take a look at this on the 1 minute chart. I mean, this was not rocket science at all. Let it fall, look for the retest. I thought we'd maybe get a retest to here, but it just kept going. Comes up, failure right there at the open. You're just looking for your entry, you put it on. You're trimming right here. I actually got out here when it hit, let it reset, got back in again, and then just wrote the darn thing down. And it was just it's a very simple trade. You were never out of it. And the point that I'm getting at with all this is once that trend is established, that is what's following through, not the reversal. We're not seeing that bid in the market. I want to really hammer that home. Interestingly, AMAT I thought was really good. People are saying that maybe the guidance was misunderstood. Time recording this, I haven't listened to the conference call. This reminds me a lot of like previous AMAT where everybody thought that it was disgusting and everybody sold it down, and then the next day it was up like $5 or $6 and nobody understood why. I don't see anything that should have this down 9, but it's down 9, so there it is. So it is what it is. Not much I could say about it. ASTS space phones. If we take a look here, you're down about $3. Huge short position here. It looks like you're supposed to make 1.8. You made 1.1. And you lost more money. I know space phones are expensive, so we'll see how this plays out tomorrow. But there's a huge short position. This could be one of those names where everybody's short and everybody tries to cover, and we all know how that goes. That is it.